The markets are down another 1.5 trillion as this fight for power between Jay Powell and President Donald Trump is becoming more and more intense. So yesterday, as part of Jay Powell's Wednesday notes, he said a couple of things. One of which is that he expects President Trump's tariff campaign to further push inflation. He also said that they see those inflation risks, but won't necessarily step in to help financial markets with lower interest rates if stocks plummeted. And the tariffs threaten to slow the economy while pushing up inflation, which puts the Fed in a very difficult position since its monetary policy tools can only help with one of those problems at a time. And then Jay Powell also went to say that the tariffs are larger than forecasters had expected, certainly larger than we, aka the Fed, expected, even in our upside case. And as a result of that, saying that they're very unlikely to cut interest rates. Taking a quick look at Polymarket, obviously those markets reacted immediately when it comes to the question of the Fed decision in May. The no change chance is now up to 88%. Back in March, it was basically a coin flip between a 25 bips decrease or no change. But now the market is very, very strongly leaning that interest rates are going to stay high. As I said, that led to the stock markets plummeting a bit more. Just taking a quick look at the S&P 500, we see Apple, Amazon, Microsoft being down anywhere between 3 and 4%. Nvidia, that is also as a result of the news that we covered yesterday, that they have to pay $5.5 billion in that licensing or export license fee to China is down 7%. So it's been a bit hit way harder. Today, Donald Trump came back on Truth Social to reply to that. And I'm just going to read the post. Donald Trump says, the ECB is expected to cut interest rates for the 7th time. And yet, too late, Jerome Powell of the Fed, who's always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Too late should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. So pretty strong words also coming from Donald Trump, which in my personal opinion shows how much he is pushing to see those interest rates being lowered. And if I had to pay more color to it, that post almost sounds a bit desperate in the way that it is worded. Going on to the other side of things that you mentioned, gold, and kind of continuing the conversation yesterday, because the question is, what asset are people buying right now? Crypto is stable. Stock markets are trending down. The asset that is trending up is gold. We said it yesterday. Gold price did hit an all-time high at 3.3K per fine ounce. That basically puts gold up at a 10% gain over the last 30 days, which for an asset like gold is insane. Also up 40% over the year, which is a very significant move for gold. It typically does not move that strongly. And there's also an interesting, and that's the last piece of data that I want to share for now, interesting what's the name again? Interesting question on Polymarket going on. What price will gold close at in 2025? And more than 60% believe that it's going to trade above 3.2K, which is a strong indicator to say that this trend for gold will continue or at least hold over the course of the year. And the market, or Polymarket, that's of 350K volume, is not expecting gold to dump anytime soon.
Interesting. Thanks very much for the summary. All kinds of follow-on questions, perhaps. Okay, what are our thoughts? Going straight to the Trump tweet, maybe. And would love to get stats involved in this conversation just after this question as well. What are our thoughts on the tweet? You said it kind of seemed a bit desperate. It's clear what the intention is, right? They just want rates down immediately. Like they want rates down yesterday, basically. And that is not what is happening. So when you think through what the consequences of that are, along with this escalating trade war with China, we spoke yesterday about how, okay, so America are going to stop the chips, and you touched on Nvidia kind of responding to that. China, we're going to stop taking Boeing. I believe that was part of some type of retaliation on the trade side. What a where do we go from here? Like, are we just gonna? You said the poly market for gold is gonna. People are betting that it's gonna stay high for longer. This is gonna be a multi-month thing, isn't it? That's what I'm thinking. Yesterday, I kind of went into the Brexit conversation, or though I appreciate this is way way bigger than Brexit. The parallel for me was the idea that, or the parallel for me was all kinds of things kind of falling apart through Brexit, and then the time that it took to start to piece it all back together, and it ends up just being so much longer than anyone thinks. And so that was where I started to think, okay, this is kind of similar. What are your thoughts, sir?
Yeah, it's kind of similar, and the thing is that there's like also multiple battlefields at the same time. On the one hand, as you said, there's the interest rate part of the discussion. Then we have the treasury yields, the 10-year yields, which is something that this administration also wants to get lower, and they are still very, very high at 4.3%. That again is to do. The reason why you want to see that number lower for the bonds market is because the US has to refinance part of its debt towards the end of the year. Then you obviously still have the trade war with mainly China, and as part of that, we've also seen some talkings around the deals that the US is currently working on with those 70 countries that allegedly include some sort of additional restrictions for China. So if you want to strike a deal with the US as a country which is not China, you will have to have some measures in there that are to the detriment of China, which is
That's really
basically an
important
additional effort
to point out.
yeah, to single out and isolate China. So those are like the three main battlefields that I see right now. And Trump is not really at this moment in time winning on any of them. Like the trade war still goes on, stocks are plummeting, the 10-year yield is still high. The Fed is now saying that they're not cutting rates anytime soon. So then probably his natural reaction is to go out and blame J Powell and say, yeah, he's the worst. He should have cut rates long ago because I'm doing everything for the States, but he's like, quote unquote, fighting against me.